Welcome back to Dense Stocks, guys. Today we're going to be talking about why Tesla did so well in Q3 and Q4 of 2019.
It's dense stocks. I teach you about stocks cause we're both dense.
To understand Tesla's success in the second half of 2019, you have to understand what Tesla went through in the first half of 2019. And to sort of set the stage, we're going to recap a little bit of what Tesla was going into when they were first founded and what they have seen since leading up to this point. If you don't want to watch this part of the video and you want to skip around, there's going to be links in the description where you can click to skip to different parts of the video. Anyway, to talk about the scene that Tesla went into when they were first founded, internal combustion engines got more intricate and difficult to develop towards the end of the 20th century. Electric cars surfaced every once in a while, however, they didn't really do well enough to justify developing the technology. Simply put, they just didn't have the battery power back then. As internal combustion engines got more intricate, it became harder for new manufacturers to enter the scene. In fact, there are well over 1,000 American automotive companies that were founded over the past 140 years or so, but there are only 3 still around today that still produce cars in high volume. That's Ford, GM, and Fiat Chrysler. Tesla does produce cars in high volume today, depending on what your standard is. Ford produces several million cars per year. Tesla produced 360,000 this past year. So again, depends on your definition, but Tesla still produces way more than any other American car company in existence today, besides the big 3. In case you were wondering about the most recently established American car manufacturer that's still around today, it was Chrysler, founded in 1925. Besides the big 3, Ford, Fiat Chrysler, and GM, there are 13 American automotive manufacturers that still produce cars today. Of the 13, there are 8 that produce their own cars from scratch, and there are 5 that just modify other cars, like Roush, Saleen, that sort of thing. Of the 13 minor car manufacturers in America, there are only 2 that produce more than 10,000 cars per year. That's Tesla and Shelby. Needless to say, the car manufacturing scene is incredibly difficult to enter and very competitive. In addition, Tesla came around in a period of time where electric vehicles were sort of looked down on in general. In the early 2000s, GM made a fully electric vehicle called the EV1, and it was a pretty moderate success, but 2 or 3 years later, GM recalled every single vehicle. Some say that this was due to pressure from the oil industry. The next major step for electric vehicles was the Prius, which, while it wasn't fully electric, it sort of warmed people up to the idea of cars that are powered by electricity, even if it's in tandem with traditional internal combustion engines. Even though it had a stigma of being underpowered and kind of lame, the Prius was a pretty good success. It got great miles to the gallon originally, but interestingly, throughout the years, the Prius got worse and worse gas mileage as newer models came out. And even though the gas mileage got worse year over year, the car itself didn't get more powerful, which added to the stigma of electric or hybrid cars being wimpy, underpowered, not desirable, just sort of lame in general. Throughout the 2000s, there was a handful of electric vehicles produced, and then a couple hybrids here and there. However, still, again, none of them really caught on. Tesla was the first big deal in the EV world. The 2008 Tesla Roadster boasted supercar level power and acceleration, with about 250 miles or about 400 kilometers of range, which was pretty good. Still though, it wasn't mass-produced, and you had to put down a $50,000 deposit on the $200,000 car to even reserve it. Although very far from the hands of the average consumer, Tesla showed that it could be done. Electric vehicles could be the future, and it sort of started to break the stigma that they were lame. Anyway, that was the scene that Tesla was entering into. Very niche in a super competitive field. The scene they were entering into was unfriendly, unwelcoming, full of FUD, and the most recent car manufacturer at that point was founded in 1925, so there wasn't a whole lot of reason to believe that Tesla was going to succeed. People thought it was going to be just another DeLorean, where it was pretty cool at the time, but they didn't last very long, and then they're going to be a relic. To be fair, Tesla had their fair share of issues in their first decade or so of existence. They almost went bankrupt twice, and then there were concerns whether or not their production could meet the demands of consumers. The doubt that people had for Tesla was grounded. There wasn't a lot of support, there wasn't a lot of reason to believe that Tesla was going to make it anywhere. In the first half of 2019, Tesla was producing 3 vehicles. The Model S, which was a luxury sedan, the Model X, which is a luxury SUV, and the Model 3, a cheaper, smaller, more marketable sedan. While they were producing and selling a fair amount of cars, it felt like negative headlines were being put out about Tesla 24/7. I'd say it was about half and half actual bad or concerning things that were happening, and then the other half being just media spin on trivial or whatever events. There are a couple things that contributed to Tesla's fall from $340 per share to a mere $177. The first major event was Model 3 demand concerns. The Model 3 was Tesla's first entry into a non-luxury class, and as such, there were a lot of people with really high expectations for sales numbers. In fact, they were getting orders faster than they could produce cars. Their factories couldn't keep up. There were people that were waiting between 3 and 6 months for their car to arrive. People were saying that this was going to be the death of Tesla, that people were just going to hate them so much because they had to wait so long for their car. Tesla's third factory was announced to be built in Shanghai, and construction started in January of 2019. However, updates were few and far between, and many were claiming that Tesla wasn't actually building the factory according to the timeline that they had set. This made it seem like Tesla was dragging their feet with all their projects. Not to mention that the lackluster Q1 delivery numbers, which were released in April, left a lot to be desired. Even though quarter one is notoriously difficult for automotive manufacturers, it still was way lower than people were expecting. And when the quarter one earnings report came out, Tesla reported a loss of $702 million, which again led investors to believe that the future was bleak for Tesla and there might not be much longer. The financials and statistics were looking grim for Tesla. Tesla had less cash on hand, lower production, lower sales, and people were waiting forever to get their cars. All the time there were news reports saying bad things about Tesla. There were people saying that the door panels didn't line up properly. Autopilot was still early in development, and so every crash that involved a Tesla brought questions of, well, was autopilot engaged? Did autopilot play a factor in it? Was the driver paying attention? And to be fair, Tesla was wading in a lot of uncharted territory. At any point, the National Highway and Traffic Safety Administration could have just said, all right, you're done. No autopilot, that's not safe. Not to mention, on top of all this, Tesla was expanding their solar sector, producing and installing solar panels, when Walmart threatened a lawsuit claiming that some solar panels that Tesla had installed were catching fire. Tesla's second quarter results definitely didn't help anything either. Analysts were expecting a loss of 40 cents per share, however, Tesla almost tripled that with a loss of $1.12 per share. Revenue was about what was expected, but still a little bit less. Deliveries were almost on track, almost getting better, but still a little bit less than expectations. Investors were holding on to whatever slivers of hope they could. It was looking like a pretty low chance that Tesla was going to meet its goal of 360,000 vehicles for the year of 2019. In the quarter two earnings call, Elon talked quite a bit about how he was expecting Tesla Solar to grow in the months to come. It seemed sort of just like speculation and empty comfort, but over time, real developments were made. Tesla started a new program with their energy department where they promised and guaranteed that your solar panels would save you more money than the monthly cost. The new Powerwall and Powerpack also gained traction, high-capacity batteries for either the home or the grid of a city. New battery technologies and over-the-air updates allowed it for Tesla to send updates to the cars overnight, and Tesla owners would wake up to a faster, more efficient car. These over-the-air updates were a huge hit with Tesla owners who could wake up to a car with more features and improvements. Elon Musk tends to be an extremely polarizing figure. People either love him or they hate him. In the second half of 2019, Elon started to act more like a CEO. His Twitter tirades, as people called them, were getting lower in intensity and frequency. He started to take people's suggestions from Twitter and actually implement them into the car's software. Tesla's cars also got lofty praise in the second half of 2019, with Motor Trend saying that the 2013 Model S was the best car that they've ever seen in 70 years of reviewing cars. About the 2013 Model S, Motor Trend said, "No vehicle we've awarded, be it car of the year, import car of the year, SUV of the year, or truck of the year, can equal the impact, performance, and engineering excellence that is our ultimate car of the year winner, the 2013 Model S." Many other magazines and blogs gave huge accolades to the Model S, Model 3, and Model X. People saw the features, the innovation, the engineering, and the willingness of the company to listen to their customers. In addition, people finally began to see the value of Tesla as a potential disruptor to the rest of the automotive industry. Tesla doesn't do dealerships. You buy directly from them and they deliver your car to your home or to your place of work. Statistics also began to be more widely published about just how much cheaper it is to own an electric car. Between servicing, gas prices, dealership fees, everything seemed to be cheaper about owning an electric car. The most pivotal moment of 2019, however, came when Tesla reported its third quarter earnings. Analysts were expecting a loss of 42 cents per share, which was even worse than Tesla's quarter two results. However, Tesla surprised everyone with a gain of a whopping $1.86 per share. This represented many other things, including Tesla's ability to adapt, to fix bottlenecks, and to cut costs. Not only this, but in quarter three, they delivered a whopping 97,000 vehicles, which meant that if they could do that again in quarter four, they could pretty well hit their goal of 360,000 vehicles for the year. That earnings report sent Tesla up a whopping 33%. The rise in the stock price, combined with promising financial reports, caused a lot of analysts to change their views and target prices for Tesla, which in turn brought the stock up even higher. Not only that, but in October, Tesla announced that they had finished Gigafactory 3. They had done it in a record-breaking 10.5 months from start to finish. Elon said on the quarter three earnings report that this was, as far as he knew, the shortest amount of time for a factory of this size to have ever been built. As if that wasn't enough, shortly after they announced that Gigafactory 4 was going to be built in Germany very soon. The idea that Gigafactory 3 would be a flop and Tesla wouldn't do well in China was very quickly shattered by a huge rise in demand, as well as an increase in the notoriety and opinion of Tesla by the Chinese. As this was going on, a lot of Tesla's opponents began to look at an electric car company called NIO. Many other Tesla competitors started popping up in different markets around the same time. There was the Porsche Taycan Turbo, the Rivian R1T, and the R1S. The Bollinger B1 and B2, as well as the Mustang Mach-E. The issue with these supposed Tesla killers is that none of them had an actual production car for sale yet. Even still, their prototypes were pretty surprisingly lackluster, and those were just the prototypes. Not that those new and existing electric vehicles were bad per se, but you could get a car with better handling, efficiency, and range for cheaper. Many of the up-and-coming electric cars that were announced had very optimistic timelines. However, the automakers very quickly found out that it's harder than it seems to make a car from start to finish. It became a running joke among Tesla fans that a new Tesla killer would pop up and they'd say it'd be done in a year and then Tesla would be gone, and then they'd realize that it's a lot harder than they think to make it, and so they'd push the time back, and then that would just increase the stock even more because it seemed like Tesla was the only one that could do this. Granted, of course, that's not the case. More electric car companies will be successful in the future, but right now, Tesla is dominating the electric vehicle scene. All of these factors contributed to Tesla rising past 2, 3, 4, and up into the 500s throughout the fall and winter. Tesla's surprise profit in quarter 3 was phenomenal. However, residual memories of quarter 1 and quarter 2 of the same year still kind of persist. This being said though, quarter 4 tends to be automakers' best quarter, so it's kind of hard to say. Recently, a huge number of analysts have increased their price target for Tesla. For a while, it seemed like it was one analyst per day that was raising their price target. This also helped to pad the stock price. Another interesting thing going on right now with Tesla is that the short interest has not dropped that much. The total number of short sellers that are actively shorting the stock has not gone down as much as you would expect considering the huge rally that Tesla's been going through. As Tesla started taking off, we saw a pretty good drop in short sellers. However, that drop kind of plateaued out and there's still a crazy number of short sellers. In regard to the resolve and iron grip of short sellers on Tesla, Ihor Dusanilski on Twitter said, quote, "Tesla is a once-in-a-lifetime short, a unicorn covered in a blanket of four-leaf clovers drinking from the fountain of youth while watching the Jets in a Super Bowl as shooting stars cover the night sky." Needless to say, it is a rare circumstance that Tesla is in, having this many short sellers despite the enormous rally that has gone on. If the price of the stock goes up by much more, institutions are going to start forcing short sellers to cover their positions, which is going to drive the stock price up even more. However, it's hard to say exactly when that will happen. If some whale of a financial institution admits to buying a portion of the stock, this will also drive the stock price way up, even if they did it a couple months ago but are just announcing it now. If Tesla gets added to the S&P 500, that'll force other financial institutions and investment banks to hold shares of the stock, which again will drive it way up. Towards the end of this past year, Tesla gave us a fairly good reason to believe that quarter 4 earnings report is going to be pretty good. The Shanghai factory started producing a pretty good amount of Model 3s towards the end of the year. However, only 15 were actually delivered to the customers. The 15 that were delivered in a special event for Tesla employees as sort of a sentimental thing first. But it's kind of curious, because normally Tesla is rushing to deliver as many cars as they can before the end of the quarter. However, here in the Made in China Model 3 case, they were sitting on a fair amount of Model 3s, probably several thousand. They could have delivered those, but they didn't. That, combined with the fact that they did beat their guidance of 360,000 vehicles for the year, gives reason to believe that Elon is fairly confident with how the company is doing for this quarter. In addition, Tesla Solar continues to grow under the radar. Most people don't really think about it because when they think of Tesla, they only think of the automotive sector. However, Tesla solar panels are increasing in both popularity and notoriety. In addition to that, there is quite a bit of legislature that is on the way that may possibly require all houses being built in the future to have solar panels installed with the house, for which Tesla could be a huge benefactor if they can get in on that. Gaining in the background, same goes for Tesla's insurance program. Not at the moment, I believe it's only in California for right now, but Tesla and Elon have both expressed that they desire to grow that nationally and internationally in the future. More and more keeps happening with the company, which drives more people on board, which drives the stock price even higher. Tesla's quarter 4 earnings report will take place on Wednesday, January 29th, and will almost definitely be another huge pivotal moment for the company. Elon loves surprises, so there's no knowing what the earnings report could hold. There could be some crazy stuff that none of us have even thought about yet. There's quite a bit of potential and reason to argue for either side. However, I really think Tesla's going to come through and pull out a record-breaking quarter for quarter 4. Anyway, guys, as always, thank you for watching. Give me a like. Talk to me in the comments. I'll respond to as many people as I can. Follow my Twitter at Tophlars, Tophlars, and read my articles on Testmanian.com. I think that's about everything I have to plug, so we'll see you on the next video, guys. Thanks again.